broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant, with me, my colleague Sonia and Nigel. Guys, hi, morning.
Hi,
morning.
Good morning. Well, how are you feeling today?
Very good.
Always good, right?
Always good, always optimistic, but good cues, right, for the market as well. I mean, the big tech companies in the US did well.
Yeah.
Back home as well, good earnings from Tata Consumer, from Bajaj Auto. So I think the market is getting some more, ammunition to move forward.
You know, the fact is, Sonia, if it had not been for the tech earnings that you mentioned, we would have sort of started on a somber kind of note. But this lifts things, and I'll tell you why. So, last night, you had, for the first time in a very long time, that stocks fell at the open, but they did not do what they've done for weeks on end, which is, the dip gets bought. They did not bounce. The S&P 500 ended lower, sharply lower. The Nasdaq was down even more, almost a full 2%. The regional banks index was down 4%. So, the First Republic Bank, which had reported results recently, that fell almost 50% by close. It was a late fall, and that kind of had contagion impact on the other regional banks index. The measure is on your screen, a full 4% cut. So, so far, the story is pretty poor. Economic data also has been mixed. So, new home sales data is very strong. On the other hand, consumer confidence is almost at a 9-month low. It's always is the case that at the end of a cycle, and if you believe that we are at the end of a rate hiking campaign, when policymakers start to wait to assess the impact of what they've done, data gets very fuzzy. It's not one way. Data was one way, beating expectations when about a year ago, 6 months back, but it's not the case anymore. But it's always like that. It's to be expected and anticipated. It gets confusing, and that's where we are at. Now to the good part, right? After close, two giant IT companies reported numbers, Microsoft and Google, Alphabet. Both beat expectations in a very handsome way. Actually, if you look at what stocks are doing post-market in the US, Microsoft especially, we're seeing large gains. Actually, the guidance which came through from Microsoft was also very, very encouraging. So these are the two things which I think will lift the broader sentiment, especially in the tech space, when we come back into trade in the US later tonight. But we are trading now, and I think this should, at the margin, limit some of the damage had these numbers sort of missed expectations and not been as good as they are. So I think this is the silver lining this morning that we are beginning trade with. Now let's come to the market here. The Nifty yesterday had a flat close. The promise of another rally, a follow-through rally after Monday's big move, it was not really, it did not materialize really. The levels remain the same. On the Nifty, you continue to watch the recent high of 17,863, which is not very far away, about 100 points out. On the downside, the level that the market should hold on to is the 17,554 level. If this does not break, one could say that the uptrend remains intact. On the Bank Nifty, the levels are the same, 78.6% retracement of the entire fall. Again, the Bank Nifty had a pretty flat close. That stands at 42,965. That's the upside level to watch. On the downside, the recent swing low of 41,962 has to be protected if some selling pressure starts to come through. Watch the first hour or so, and if the impulse that you start to see, and you'll see it on the screen, is to try and buy the dip, I think go with that. The SGX is indicating an open which is neither here nor there, about 27 odd points lower, 17,759. Sonia.
Oh, absolutely. And I think the market will latch on to some of these cues that you mentioned, right?
Yeah.
So there are 2-3 of them which could aid the market sentiment today. Whether it takes the market out of its long-standing range of 17,600 to 17,800, that only time will tell. But there are more pluses than minuses as we kickstart trade. So as Prashant was pointing out, the US big tech companies posting very good set of numbers, better than street estimates. Not just Microsoft, but Alphabet as well. And Microsoft saw a big jump in revenues from its intelligent cloud business. So, that as well aided the sentiment over there. Even Alphabet, posted a profit in its cloud business for the first time ever. So that's a pocket that's doing pretty well. In our own markets, both Bajaj Auto and Tata Consumers delivered this time. Bajaj Auto's margins were at a 9-quarter high. For Tata Consumer, it was pretty much a beat on all parameters, a double-digit healthy revenue growth. EBITDA was up about 15%. And in that context, today is an important day of earnings. So a lot of numbers coming through. There's Maruti, there's Bajaj Finance, there's lots in the life insurance space. Both HDFC Life and SBI Life come out with numbers. KPIT Tech will be tracked very closely. It's been one of the strongest and most resilient stocks in the mid-cap IT space, so comes out with numbers. Getting back to the markets, yesterday FIs sold a bit. It was nothing alarming, about 400 crores, less than what they sold in the previous, on an average in the previous 5 trading sessions. And the Nifty, as I said, continues to be very range-bound, 17,600 to 17,800. The SGX Nifty is also hinting at a flat start. So let's see, there are positive cues that the markets can latch on to, but whether we move out of the trading range, maybe you just have to be a bit more patient.
Well, that's right. Sonia, but the very fact that the SGX Nifty is suggesting a bit of a pullback, I think that buy on dip thesis will hold. And in fact, if you hold on to that 17,650, you'll have to say that uptrend, the near-term uptrend, is pretty much intact. Now, overnight, we did have the Dow that ended lower, but as Sonia and Prashant mentioned, that you had a couple of positive earnings, both Microsoft as well as Alphabet. Both of them delivered good numbers, and that's why we should see some green. Now, just looking at the weightage, Microsoft is in the top 5 weightage, both on the Dow as well as on the Nasdaq, and Alphabet is in the top 5 on the Nasdaq itself. So the Nasdaq should clearly rebound today. The Indian markets, well, we came off the highs yesterday, but that was because of the expiry-related factor. So the Nifty Financial Services Index, if you look at the Nifty Financial Services Index, as well as the Nifty Bank, both of them moved down, particularly in the last 30 minutes or so. That was expiry-related. You want that to be undone today. So if that was expiry-related, you'll see a bit of a bounce back. That's the perfect chart that we're looking forward to. In terms of institutional flows, well, the previous session, we had a big buy number. That's DI and FI put it together, close to around 750 crores. Yesterday, that number came down a little bit. But the FIs, they continue covering shorts. They covered close to around 7,000 short contracts yesterday. The short positioning from more than 90% just a couple of weeks ago, it's come down to around 55%. So a lot of short covering is what we have seen. Moving to the index options data, well, 17,800 as well as 17,800 call and put, both of them were very, very active in trade yesterday. Both of them added 40 to around 50 lakh shares odd. But the key to note is where is the highest open interest? Given that we have expiry that's going to play us in the next 2 sessions, 17,700 put, more than 1.3 crore shares, in terms of open interest out there. So clearly the positioning is such that lower levels get defended, while at higher levels we're likely to see some supply. So let's pull up the levels then. Resistance will come at around 17,830. I say this because the 100 DMA comes in out there. On the downside, given that 17,700 put was fairly active, 17,675, that becomes an important support level. 17,650, 17,675. The 200 DMA is a little bit deeper at around 17,625 odd. Nifty Bank, it came off yesterday, but the crucial support is closer to around 42,500. That's just in the near term. And you'll want to see, that down move that we saw in the final 30 minutes getting undone. If that's the case, we should brace ourselves for a bit of a recovery and a bit of buy on dips. So the 30-40 point downtick actually is a bit of a blessing in disguise. If you get that, I think you need to look to buy into it, going by the data points, and hope that you see a bit of a rebound from there as well.
All right. 30 points lower on the SGX is what we have. Before we go any further, let's quickly tell you what is lined up here on the program in the first half hour of the show. We get you updates from markets across the globe. Dan Feynman is our guest in the show of Credit Suisse. He's joined us to discuss the global setup. Our research team will bring you the top list of stocks to watch out for, 10 in total as always. And at 8:30, we talk markets with Devin Choksi of KR Choksi Securities.
All right, well, let's kickstart the show now with some views coming in. One of the best minds in the business, Rhythm Desai of Morgan Stanley, first up on the show, saying that domestic ownership stake in India's top companies rose to an all-time high, while FPI stake fell to a 9-year low. He says institutions reduced exposure to financials, which continues to be Morgan Stanley's favorite sector as they expect acceleration in credit growth.
Money market views now. This is Kunal Sudani on the rupee. He's, of course, with Shin Bank. He says global equity markets fell and bonds rose, boosting the yen and the dollar. U.S. consumer confidence dropped while Fed's manufacturing and services indices decelerated. He adds fears of banking sector fallout return as First Republic Bank refrains from giving guidance. Dollar index continues to find strong support at 100.85 level for the USD INR pair. Kunal says 81.85 to a dollar acts as a support, while 82.25 to a dollar is a resistance.
Right, and on the bonds, Neeraj Gambhir of Axis Bank says the Indian 10-year benchmark bond yield traded sharply lower, mainly driven by strong bidding in Friday's auction and follow-up buying the next day. SDL auction supply was lower than anticipated, and lower oil and US Treasury yields also aided the sentiment. Neeraj says going forward, the market will take cues from auction demand, SDL auction size, and the FOMC due next week. And he expects the 10-year benchmark to trade in a range of 7.05 to 7.20%.
Okay, so we have the equity calls, we have the money market calls as well. Let's tell you about the stock-specific action that we're tracking for you today. That's in our special Top 10 segment, running you through the list. Bajaj Auto, Tata Consumer, AU Small Finance Bank, IGL, Tata Steel Long, Mahindra CIE, and Gujarat State PSUs. All of them are on our radar on the back of positive news flow. On the flip side, Dalmia Bharat, Nippon Life, as well as Mahindra Life, they are stocks that could be reacting to negative news flow.
All right, Dan Feynman is co-head of equity strategy at Asia Pacific at Credit Suisse. He's joining us right now. Dan, good to have you with us here. Thanks very much for your time. Are you still maintaining your overall sort of cautious stance? We got a cut last night, Dan. Let's just start with the data. Home sales numbers were very strong. Consumer confidence was very weak at a 9-month low. How do you square both of those? And what should we expect? What will the Fed pick up on next week when they meet to make the decision?
Well, I think it's not unusual to see mixed data when you're at a transition point for the economy. We're not in full speed ahead mode. We're not in recession yet. We're shifting into a slower growth mode. And the first thing you would be seeing is mixed data signals. That's perfectly in keeping with our expectations that the economy in the U.S. will be slipping into recession this year.
Dan, hi, good morning. So, that seems to be the base case now, that the US is going to be slipping into a recession. But for most markets, including emerging markets like India, there's some semblance of sanity that has returned. After a steep fall last year, this year the market is sort of clawing back a tad bit. Do you think now valuations are ripe for investing into a market like India?
Well, India in particular remains on the expensive side. India has been very expensive, even by its own standards, for 2 years now. It's given up quite a bit of that valuation premium, but it's still an expensive market relative to its own history, relative to the rest of the region. The rest of Asia, however, I think is looking much more appealing. North Asia is clearly cheap. There are some markets in Southeast Asia that are cheap. In general, emerging markets globally, I think, are good value. This is in contrast to the U.S., which still doesn't look cheap to us.
All right. Hi, Dan. I think the last time we spoke as well, you mentioned that you prefer emerging markets in comparison to the U.S. markets, and I think you're holding on to that thought. But it appears because of valuations, India is not really up there as of now. Two-part question, though, I want to ask you about the global markets. One is, what kind of hikes are you working with? It appears 25 basis point is almost a done deal for May. But post that, are you seeing a pause, a pivot at some point of time, a cut later this year? And also the banking crisis in U.S., every now and then we're getting some bit of jitters. Is that a cause of worry, or do you think that'll be taken care of?
I'm having trouble with audio. If the producers could turn up the volume, that would be helpful. Let me answer your first question.
Let me try again.
Okay.
Yeah, Dan, let me try again. One point I wanted to understand was on the Fed rate hike trajectory and if there's a cut in store. And the second point is about the banking crisis. Every now and then we're hearing about a U.S. bank looking a little bit jittery. Go ahead.
Okay, I'm still having trouble with audio, but I think I catch the gist of your questions. First of all, on the rates issue, I think that we are more likely to see a pause rather than a full-on pivot where the Fed cuts rates. The Fed does have other tools at its disposal to deal with the banking situation, aside from cutting interest rates. The markets have consistently underestimated how hawkish the Fed would be. I think that trend will continue and that markets will be disappointed if they're expecting a pivot. As far as the banking crisis is concerned, as I say, I think the Fed has other tools at its disposal to deal with that. It won't have to use monetary policy. That is not going to be its favored tool. It can engineer a rescue handled by other big banks. It could wind it up as it did with Silicon Valley Bank and have the government take it over. But I think that its last option of choice would be to use monetary policy to prop up the banking system.
Dan, any specific views on India, emerging markets, what global funds are positioned like right now?
Well, funds have, I think, gone more towards a neutral position. Global funds have gone more towards a neutral position in India. You go back to 2021, they were heavily overweight. Then last year they sold down. This year, I think they're sitting at more of a neutral position. They like the underlying economic story, but not entirely comfortable with the valuations even now.
All right, Dan, we leave it at that. Thanks a lot for stopping by and speaking with CNBC-TV18. Appreciate your thoughts. So that's the word on the global market, but we have to take a short break because there's so many stocks to discuss locally. Bajaj Auto, Tata Consumer, Maruti comes out with numbers today. SKP IT Tech's earnings, lots to discuss. We'll come back in just a bit. Stay tuned.
That's the boss's cabin. The canteen is behind. Good morning, ma'am. Good morning. And you are here. Good morning. Good morning.
मैम और कोई ऑप्शंस
लाइफ में और कहीं ऑप्शंस मिले ना मिले, मोतीलाल ओसवाल आपको देता है ऑप्शंस ट्रेडिंग में ऑप्शंस। इंट्रोड्यूसिंग मोतीलाल ओसवाल ऑप्शन स्टोर विद अ वाइड रेंज ऑफ ऑप्शंस इन ऑप्शंस ट्रेडिंग। एक्सप्लोर करो ऑप्शन स्टोर। Investment in securities market is subject to market risks. Read all the related documents carefully before investing.
कमाल की कार है ना, अभी ले लें क्या?
सर, कमाल की कार के लिए कमाल का पेट्रोल भी चाहिए, एकदम टॉप का, जो हमारे इंडिया में मिलता कहाँ है?
अरे सर, पर इंडियन ऑयल पे मिलता है। प्रीमियम कार्स के लिए इंडियन ऑयल ने बनाया है 100 ऑक्टेन वाला देश का सबसे प्रीमियम पेट्रोल, XP 100।
वाह, इंडियन ऑयल की बात ही कुछ और है।
इंडियन ऑयल, पहले इंडियन, फिर ऑयल।
Cashless hospitalization is easy. Get details on our network hospitals at www.starhealth.in. Always at your doorstep.
AC gone.
Blue Star on.
Blue Star fast cool inverter AC with voice command. Bye bye heat. Blue Star.
कैसे करते हैं ट्रेड? ट्राई 5 पैसा। ऑर्डर छोटा हो या बड़ा या कार्ट में पड़ा, कोई वैल्यू या सेगमेंट या कोई भी टाइप, ब्रोकरेज को लेकर अब नो मोह है। और सुन, 2 लाख के स्टॉक्स या 2000, इन्वेस्ट मर्जी से करो यार। ना लगे कैलकुलेटर, ना लगेगा पेन, अल्ट्रा ट्रेडर पैक से होगा ब्रोकरेज सिर्फ ₹10। कमीशन की टेंशन छोड़ो, 5 पैसा से रिश्ता जोड़ो। विद 5 पैसास अल्ट्रा ट्रेडर पैक, ब्रोकरेज होगी सिर्फ ₹10 फ्लैट। बीट दैट। ऐसे करते हैं ट्रेड। सोच मत छोटे, इंस्टॉल मार।
Investment in securities market are subject to market risk. Read all related documents carefully before investing.
Welcome back. You're tuned into Bazaar Morning Call. Hope you're having a good morning. Well, as promised, we have plenty of stocks that we're tracking for you, and our research team joins us to run us through the entire list. Morning, guys. Sonia, you go first. Bajaj Auto, good set of numbers.
Good set of numbers, but you know what, Nigel? It's perhaps in the price as well, right? I mean, it's at a 52-week high.
Yes.
It's gained 20% this year. So just keep that going with that caveat. Good numbers, stable numbers in what was a really challenging environment. Above street estimates, it's a third quarter of margin improvement. The margins, in fact, went up 220 basis points on a year-on-year basis. Even the top line, despite a fall of 38% in export volumes, they managed to garner almost a 7% revenue growth. That's because domestic volumes have been pretty good. They took price hikes, etc. EBITDA went up 9.1% and margins have improved. Now, I do want to take you through what brokerages are saying, because A lot of brokerages have raised their earnings estimate and price targets on the stock. Jefferies says this was a very strong quarter in what is tough times. They retain buy, but they've raised their target price to 5,100 on the stock from 4,800 earlier. They've also raised FY24 and 25 EPS estimates. Motilal Oswal says it's a strong product mix that has driven an all-round beat. The EBITDA margin is at a 9-quarter high, and there are 3 catalysts now for Bajaj Auto to move up further. One is the Chetak electric vehicle ramp-up. 2 is a Triumph product launch that happens in June, and 3 is a recovery in exports, which the management said will happen from July onwards. Morgan Stanley has raised their target price from 4,486 to 5,063. They talk about a notable upside in the near term. Same triggers: industry recovery, Triumph launch, and also 4% dividend yield, which is keeping them bullish.
Okay, all right. So stock is at a 52-week high, but those numbers look good, so that stock should open up in the green. Mangalam joins us to tell us about Tata Consumer. Mangalam, well, that one as well has seen a little bit of a pre-result rally, but the numbers are good.
Well, you know, pre-positioning of stock prices before numbers is taking the joy out of a big surprise. On Monday, the stock was up 5%, and we were all wondering why. Now we know the results are a beat on all parameters. The revenue at 3,600 crores, above our street expectations of 3528 crores. The EBITDA a little over 500 crores. We were working with a number sub 500 crores. And the margins as well as the net profit beating expectations. The India business grew at 15%. The street was working with a number of 12 to 13%. And the India food business grew 26%. That's largely in line. But at the same time, the Narishco business reported a revenue of 180 crores. The street was working with a number of 150 crores. And strong revenue coming in their international business as well. The biggest positive for me this time around is the sharp sequential recovery that we've seen in the international business, telling you that that is on a gradual path to recovery going forward as well, as the management has guided. And for all of us, Starbucks consumers would be happy to know that Starbucks has crossed 1,000 crores for the revenues in FY23. Good numbers. The stock has seen a rally. Let's see how it opens.
Well, with the kind of, the way they charge people on coffee, it's no surprise that they're crossing 1,000 crores. I mean, the coffee is now just a simple latte that you order, or a cold coffee, right? Now it's a minimum price of 350 to 400 rupees.
The Americano that you ordered the other day was for 300 odd rupees. But interesting, 11 years ago,
it's
Starbucks...
just water and one espresso shot.
That explains 1,000 crores and good gross margins as well, I guess. You don't buy the coffee, you buy the logo on the glass.
I think if anyone is from Starbucks is watching, they'll have this water and...
I hope my mother's not watching, because she's the one who, believes that you grossly overpaying Starbucks. I mean, just make coffee at home. But
yes.
I guess...
All right, well, that's coffee for you. We consume a lot of it all day. Starbucks not otherwise. But AU Small Finance Bank is the next company we're talking about. Abhishek has got more details on the numbers. Abhishek.
Well, Prashant, the net interest margin has compressed this time around, and as per management, it is expected to compress going ahead as well. So the net interest margin is on a declining trend from current quarter, or let's say about Q4 FY23. So for the quarter, the net interest margin was at 6.1% when compared to 6.3% in the same quarter last year, and about 6.2% in the previous quarter. The operating profit growth is at a mere 2.74% on a sequential basis, despite the fact that they have had robust loan growth. Last quarter, the operating profit growth was nearly about 11.5% quarter on quarter. So there is some compression seen in the operating profit growth as well. Cost to income ratio, that spiked to 63.1% when compared to 61.6%. They are having other expenses issue in the OPEX this time around, which has increased the cost to income ratio as well. Lower tax rate has aided in profitability. The tax rate is below 20% from the earlier level of a little under 25%. Asset quality remains good. It has improved. Gross NPA ratio is at 1.66% when compared to 1.81% in the previous quarter. The restructured book has also declined to about nearly 1.2% when compared to 1.66% in the previous quarter. So in terms of P&L, both NII and PAT is a beat on our poll. Back to you.
Thanks a lot for that, Abhishek. Well, we are talking about good numbers coming from Bajaj as well as from Tata Consumer, and the street sensed it. Well, the street has been sensing, or there was a whisper number that maybe, in fact, Dalmia Bharat's numbers will be a little bit disappointing. So, and that is the case on the margin front. On the top line, there's a beat because they sold more. Volumes are a little bit better than the average that we put out. The EBITDA number, though, that's a bit of a beat. It's a 10% beat, 10% miss, actually, in comparison to what we were working with. The margins as well did come in a little bit lower, but first look at it, everyone thought the profit number is much better. But that's a one-time income that they've got because they've sold their non-core assets. The reason the margins have missed is because the raw material costs, you take the cost of raw material inventory and put it together. Well, that's at around 750 crores. In the past quarters, it was around 450 crores odd. So this higher raw material cost is what's dented the EBITDA per ton as well as the EBITDA margins. Now, it's not the street wasn't prepared, because in the last 1 week or so, the stock is down 5-6% or thereabouts if you pull up a last 1 week chart. And what will support the stock is higher raw material build-up will support them in the coming quarters. Valuations, they're attractive. It trades at a bit of a discount in comparison to the larger names, and good visibility on capacity addition. So they're talking about ending this year at around 46 million tons from around 41 million tons. So it opens up in the red, but I think from lower levels, you'll see a bit of a bounce coming in on that one.
Okay, we'll keep an eye out on that one. Let's go across to Sonal now. She's tracking the PNGRB order on gas and what the implications of this on stocks as well. Sonal, good morning.
Well, it's largely for IGL, Sonia. PNGRB has resolved on long outstanding authorization issues for IGL. This is with respect to 3 geographical areas, Faridabad, Greater Noida and Gurugram as well. Now, ICICI Securities says that it resolves long outstanding issues, so of course it's a positive. But in terms of what the order really says, now IGL supplies 0.5 MMSCMD of gas to these 3 areas at a nominal margin of ₹2 per SCM. For other areas, it's around 7.5 rupees per SCM. So they were earning really low numbers as far as these 3 geographical areas are concerned. Now, there have been orders for specific areas as well from the PNGRB. Greater Noida authorization has been completely given to IGL. This can add 30 crore of EBITDA for the company in current volumes, around 100 crore by FY24. Faridabad has been divided into 2 parts. One part has been given to IGL, from which it can benefit from additional EBITDA of around 25 to 30 crore rupees. When it comes to Gurugram, only 30 to 40% of the area has been granted to IGL, and this has come in as a disappointment because this is where they were expecting the next leg of growth, because it's a larger area in terms of volumes as well. So volumes would be around 0.7 to 0.8 MMSCMD. This is by FY26. This could add 220 crore of additional EBITDA, but they had expected 2.5 MMSCMD of volumes from Gurugram, so the EBITDA is lower, but yes, it has come in as a relief for IGL.
Okay, all right, Sonal, thanks very much for that. Well, more earnings in focus. Surabhi's got that list. She's joining us right now. Surabhi.
Thanks so much for that. So I'm watching out for quite a few earnings today. The first one is Nippon Life AMC. On a sequential basis, the revenue is down nearly 2%. The operating profit is down 2.4%. And the pressure on the yields continue. The revenue yield is down by 1.4% at 47.7 basis points. Next is Tata Steel Long Products. The company continues to make losses, but there is some improvement on a sequential basis, which is a positive. The revenue is up 43% on a quarter-on-quarter basis. They've reported an EBITDA loss of 41 crores versus 372 crores, and a net loss is contracted by nearly 260 crores, which is now at 524 crores. Mahindra CIE, a good set of numbers there. For Q1 of calendar year 2023, their revenue is up 18%, the EBITDA is up 36%, and margins are higher by nearly 200 basis points, came in at 15.6%. And lastly, Mahindra Life Spaces, the sales have dipped sequentially. The sales value is 361 crores versus 450 in the previous quarter. Their volume is at 0.49 million square feet versus 0.61 million square feet in the previous quarter. And the collections were flat on a sequential basis at 304 crores.
Okay, thanks a lot for that. Well, back to Sonal now. She's tracking the Gujarat state PSU. Sonal, why is that?
Well, that is because the Gujarat government, they have come out with a new policy for minimum levels of dividend distribution by these companies, and also for bonus shares that these companies would issue. They have set some criteria. Now for minimum level of dividend, it should be minimum of 30% profits or 5% of net worth, whichever is higher, and only minimum and maximum permissible limits should be given up by these government PSUs. In terms of buyback, they say PSUs with net worth of at least 2,000 crore rupees and cash and bank balance of 1,000 crore rupees should go ahead and do a buyback for their shareholders. In terms of bonus shares, they are looking at defined reserve and surplus equal to or more than 10 times of the paid up equity share capital of the company. In that case, they should go ahead and do a bonus share issue. Share split should be done if market price or book value exceeds 50 times of its value. So they have set out certain ways in which they can reward the shareholders. The 7 listed companies, all of them are profitable, which are owned by the Gujarat government. The likes of GNFC, GSPL, Gujarat Gas, GSFC, the other names will be for you on the screen. All of them will be in focus today on the back of this news.
Okay, thanks a lot for that. So we'll keep all of these stocks on our radar. Here's a quick recap in case you missed out on any stocks with positive news flow. There's Bajaj Auto, Tata Consumer, AU Small Finance Bank, IGL, Tata Steel Long, Mahindra CIE and Gujarat State PSUs, while stocks with negative news flow, Dalmia Bharat, Nippon Life AMC and Mahindra Life Spaces. Let's do one thing. Let's also get a handle on what's happening in the world of commodities. We have Manisha Gupta joining us for all the action that has taken place overnight. Manisha, good morning.
Morning, and thank you for that, Sonia. Well, I'm looking at the crude oil prices, which have declined 2% overnight yet again, and gasoline is trading at a 4-week lows. There are tightening financial conditions that could hurt demand, and then shrinking oil refining profits in Asia also seem to be weighing on. The U.S. weekly inventories fell by 6 million barrels as per the latest view coming in, and that also tells you that the demand is not so strong. The only thing that is keeping the prices where they are is the expectation of the China fuel demand that could come in because of driving around the Golden Week holiday. That is what the markets are holding on to. But the metals haven't fared any better because the China construction starts fell 20% in the first quarter of 2023. So you have the iron ore prices down to the lowest since the month of December. Copper is trading at a 1-month lows now on muted demand for physical deliveries. Zinc is trading at a 2-year lows. Aluminum price is trading at a 2-week lows as well. So there's barely any green across industrial commodities.
All right, Manisha, thanks very much for that. We'll take a quick commercial break here. Deven Choksi of KR Choksi will join in to touch upon, various stocks which should be in focus on the back of earnings that our research team highlighted. Later, we will connect with ML Mittal of Bharat Wire Ropes to discuss their fourth quarter earnings, which came out recently. Stay tuned.
%100% happiness with SBI Home Loans. 0 processing fee at 8.50% onwards. Apply today. Call 1800112018. Visit homeloans.sbi.
चले मामा जी घर चले
चले चले चले सांस भी नहीं लेने दी यार।
साफ हवा एंजॉय करने के लिए अब कहीं और क्यों चले, घर पे ही रुके। वोल्टास का नया प्योर एयर एडजस्टेबल एसी विद HEPA फिल्टर, ये जर्म्स और पोल्यूटेंट्स को फिल्टर करे और दे साफ ठंडी हवा 6 एडजस्टेबल टनेज मोड्स में।
तो हवा और सेविंग्स दोनों टन-टनाटन।
गुणवत्ता की बात चली है, एक नई शुरुआत मिली है, परिवर्तन को गले लगाकर अपनाएंगे Z। प्रोडक्शन भरपूर बढ़ेगा, प्रॉफिट भी अब खूब चढ़ेगा, काम को नई दिशा दिखाकर अपनाएंगे Z। चलो देश का रूप निखारें, पर्यावरण को हम ही संवारें, प्रदूषण से बचाने को अपनाएंगे।
Register with Ministry of MSME's Z certification scheme today and help India become a global manufacturing hub.
We protect you anywhere, everywhere. Family Health Optima Insurance Plan. Star Health Insurance. Always at your doorstep.
All right, hope you're having a good morning so far. The bulls definitely are, because there's lots to latch on to in terms of positive cues. Will the buy on dips continue? Time will tell. But for now, the SGX Nifty is really quiet. Deven Choksi of KR Choksi Securities is joining in. Deven, hi, good morning. Thanks for joining us this morning. It's been interesting. Good numbers coming in from a lot of Nifty heavyweights. So Bajaj Auto, for example, strong earnings in what has been a challenging environment. But the stock is up 20% this year. Do you think there's more upside left?
Yeah, good morning, Sonia. Well, I think on the domestic front, the product mix has possibly contributed to these higher numbers in this particular quarter, as well as, I think, the second half of the financial year. Largely because of the three-wheeler, which continues to remain mainstay as far as, I think, the profits and profit margins are concerned. has contributed significantly well in the product mix, and that's possibly one of the reasons for which it has shown better performance on margin front as well. In fact, it is very happy to see that Bajaj Auto is returning back to its earlier days of close to 20% kind of EBITDA margin in this particular quarter numbers. Should it sustain? Definitely there is a case for company to probably remain at a higher level than what it used to remain in the previous years. The export front, as I see it, I think remains still challenging. Not, I think, enough amount of clarity coming out as far as the export is concerned, and so would be the fluctuations on the forex. I would like to believe that I think the fluctuations on forex front probably has stabilized, and whatever advantage they have gained so far could possibly continue in time to come. But that's going to be one challenge, I think, that one will have to look out for. Overall, I think the price, according to me, I think has moved up in the last 2-3 months' time. And probably, I think it covers up most of the possible gains that the stock would otherwise give from such kind of results.
All right. Hi, Deven. Good morning. So you believe that most of the good news is possibly in the price. You know, my co-anchors and Mangalam as well were discussing about coffee. I don't know whether you're a coffee person, but Tata Consumers numbers looked very, very good. The stock, though, has run up even there. What's your view on the stock from here on?
Yeah, Nigel, good morning. Well, on the beverage front and the food products front, both of them have registered significantly better performance. On the beverages front, particularly, I think with the stores getting higher amount of footfall, comparative figures definitely, I think, are reflecting relatively better performance in this particular period. But more importantly, the growth has been registered on the food side, and that is where probably I think one is looking at higher amount of possibility of continued growth and the margins thereafter. On the volume front as well as on the revenue front, the food product segment has contributed 8% on the volume front and 25% on the revenue front growth which has come up, which probably I think is a good sign as far as I think the company's outlook is concerned. In my viewpoint, I think still there is a lot to come as far as Tata Consumers is concerned. Not many strategies have been placed in this company's growth program. And I would like to see how this company, I think, registering further numbers on a sustainable basis. But overall, good set of numbers. A stock is worth looking at investment even at current levels.
Devin, good morning. You know, one name from yesterday was Crompton Consumer, which was down 12% after all of the management changes, etc. There was a conference call yesterday evening with analysts. I don't think that has added very much to the confidence. They've basically just said that, you know, this is not new. They were looking for a new MD CEO for some time, and that the new person who's coming on is basically he fits the bill, according to the management. And I don't know how much that will do for the stock, but what's your sense? Crompton Consumer still trades at about 27, 28 times F5 24 earnings.
Hi, Prashant. Good morning. Well, I think the valuation-wise, it is adequately priced. Generally, one has seen that whenever the management changes, I think the first task that they would undertake would be to clean up the previous mistakes, or for that matter, even the balance sheet cleanup, I think, would take place if at all there are any issues which are pending. If that is the case, then possibly, I think in subsequent quarters, you might see, I think, some kind of a, check coming on to this particular front of cleaning of the balance sheet and the numbers. We have not heard anything on that front, of course, I think, from the company at this point of time. But one would like to give them a chance. Maybe I think the new management would probably start producing better strategy going forward. So let's wait and see. As of now, the stock appears to be fully priced, and I think not much is, I think, probably talked about for immediate future gain as far as I think the valuation is concerned.
All right, Devin, we'll come back to you in just a few minutes. You know, for the timing, let's focus on a smaller company, Bharat Wire Ropes. They posted a solid set of numbers in Q4 earnings. The sales bounced up. The margins came in at multi-year highs. In fact, came in at close to around 28%. Mr. Mittal, ML Mittal, Managing Director at the company, joins us on the show. Hi, Mr. Mittal. Thanks so much for joining in. Well, we haven't spoken before, but these numbers looked quite good. So we want some crisp details. For the last year, your volumes were close to around 38,500 tons. So what is the outlook in terms of volume growth for this year? What do you end FY24 with? Point number one. And point number two, Mr. Mittal, your margins are looking spectacular, 28%. What is the sustainable margin we should be looking at from here on?
Good morning. See, the volume growth is mainly three factors. One is the product mix. Second is volume growth. Third is realizations. So as compared to last year's, our realization increased almost by 30%. Volume growth increased by 13%. And product mix also we changed. We are going for the better product mix. That's why we are getting higher realizations. And I'm confident that this growth is sustainable in the coming years also.
Mr. Mittal, just to get back to the point, volumes, you're expecting it to grow by at least 13% for this year or more? From 38,000, does it go to around 44,000 for this year?
It's likely to be there, but depend upon the total productions. This is first month of operations, and we are confident. Yes, we are going to increase the production because some bottleneck in the plant capacity. We are going to add some balancing equipments that will give additional volumes also.
You have got enough capacity. What is the growth part? Should we assume 42,000 for this year?
It is likely to be, better as compared to last year's. Okay. Look into the expansion plans, means a bottleneck in the systems and additional equipment we are putting to just capture the total capacity.
So we are working with around mid-teens growth for this year. 13% is what you did last year. You're looking to replicate that. So we'll work with that for now. What about margins? I asked you that as well. 28% margins is what you did. We got you're focusing on value-added products. So give us two numbers. Sustainable margins. Second is, since you mentioned VAP, how much does value-added products contribute as a percentage of your sales?
See, almost 25% production is a value-added products we are having right now, and which is going to increase up to 40%. So this margin is going to, better as compared to earlier years. That's why we are confident this year's company can sustain the top line as well bottom lines, and we are expecting the much better margin in coming years.
So margins of what, 28%? You can hold on to these levels?
Yes, definitely we can hold this margin. Look into our track record and existing order book positions and the margins, what we are expecting. Second thing, the steel prices also going down as compared to earlier years. So that also adding the margins. Operational efficiency improving in the current years. We are having many other options like energy cost in the controls. We are going for solar. Okay. Solar will give, and LNG price is also going down. We signed the 6 years. That will give the more benefit.
Or we'll have to track that because 28% appears a very high number, but you're confident about maintaining that because of the measures, so we'll hold on to that. Final couple of questions then. In the past quarter, you've increased the promoter holding has gone up by around 3.5%. It's closer to around 40%. Does the promoter intend to hike stake from here as well? If yes, to what levels? And though you're hiking stake, but 45% of your shares are pledged. Why is that?
See, 5% we taken preferential allotment at 125 rupees. Our shares are placed to the existing bankers as part of restructuring schemes. It is not placed to any third person against the loan or anything. So we not take any financial assistance from any third parties. This is a existing bankers has placed that will release once we pay the term loans.
Okay. And promoter, will it increase stake from here on from 40%?
Not likely immediately.
Okay. All right. Final question then. Last year you did revenues of 590 crores. What do you end this year with? Should we assume around 650 crores for the year, revenues?
Revenue is likely to increase in current year also. Because as I mentioned, we are going better, certain equipment we are adding, and definitely bottleneck in the systems, whatever production, we are getting current year, definitely will get better than in the coming years.
To what levels, sir? From 590 crores, what can you do?
See, it's difficult to reply right now because of the, entire year is pending, but we are confident because we are adding the additional equipments regularly. So wherever there's a bottleneck in the systems or, utilization of capacity, we are going to achieve the higher capacity in current year also.
Got it. All right. Thank you so much for joining in. That's Bharat Wire Ropes. By the way, it's had a stellar run. It's up almost 100%, I think doubled in the last 12 months. And the promoter holding has also risen to almost 40%. So keep an eye out on that stock, one of the big buzzers in the broader markets. But let's get back to tracking some of the large cues. So many cues to look at today. Deven Choksi is still with us. Deven, the other stock that we're watching is Maruti. Comes out with numbers, later in the afternoon. And this time around, there are so many positive triggers for Maruti. Of course, demand has picked up. Supply chain constraints have eased. At this price, how does the risk-reward look?
I think on the face of it, the price probably, I think, has corrected. But at the same time, I think one wants to see the sustainability of the profit numbers. I'm not completely sure about, I think, how exactly the revenue growth definitely understood because of, I think, the volume increasing. But on the profit margin front, I think I am having my own doubts. I think I would like to see a couple of quarters of sustainable profit margins coming in for the company. Then possibly, I think the year 23-24 looks relatively more promising than it was before because most of the issues which were troubling the company have been sorted out by and large. And I think the demand scenario remains practically, I think, good for most of the companies, including for Maruti. With the new product launches, I think on that front, we are remaining relatively more strong, more convinced. I would like to see, as I said, I think how the profit margin sustains in subsequent quarters.
Okay, so that's on Maruti. Anything in the technology space, Deven, that you like? Because, you know, we've had some good numbers come in, right, in the mid-cap IT space. There's Persistent Systems, there was Mastech, Cyient, all good numbers. And today you have KPIT Tech that comes out of the earnings as well. So from that entire pocket, anything that stands out for you as a good buy now?
So generally, the observation, Sonia, is that I think in the frontline IT companies, most of the stocks have been priced to perfection levels, as a result of which I think any level of disappointment has possibly affected them more than otherwise. Though I would like to believe that I think many of the IT companies would have relatively sustained growth continued forward, largely because of the fact that the world is changing and probably I think there is a higher amount of demand for the solutions that Indian companies are offering particularly. In the mid-tier IT space companies, I think companies which are offering the solutions on the technology front and the industrial product segment, probably I think they are relatively better off because they are having that niche in this particular area where probably the sustainability of the business is seen much higher. At the same time, I think some of the specialized applications, particularly I think where the changes are coming very rapidly, and that is going to be the automobile segment, where the autonomous car, particularly electric vehicles along with, I would think there is going to be, I think, higher amount of demand for the niche players like KPIT or for that matter Tata Elxsi in this particular space, including companies like LTTS, I mean, where we see higher amount of growth coming from the industrial segment, would possibly mean that I think this company should relatively produce better performance. So we would be selective about looking at IT companies, and particularly in the mid-tier segment, where I think the opportunity looks more reassuring than otherwise.
Okay, all right, Deven, thanks a lot for that. But, you know, we request you to stay with us for a little bit. We'll slip into a short break. We come back, we continue our chat with Deven. We'll also tell you what's lined up for the next half hour on the show today. Coming up, we'll have Anuj Singhal, who'll be joining us for a complete trade setup. Post that, we'll get you the top stock picks for the day from our technical as well as F&O experts. And before market opens in CNBC-TV18's Stock Board, we'll highlight all the top stocks to focus on, which will be reacting to news. Stay with us.
Is your strategy ambitious enough to drive transformation at scale? How can you design and deliver a strategy fit for the real world? Are you reframing your future, or is the future reframing you? Realize your transformation with connected strategy, transactions, and technology. Reframe your future with EY.
Cashless hospitalization is easy. Get details on our network hospitals at www.starhealth.in. Always at your doorstep.
Z-Black Premium Agarbatti and Dhoop, official prayer partner, Delhi Capitals.
Mankind Pharma Limited now makes an initial public offer of equity shares of face value 1 rupee each for cash at a premium. The 100% book-built offer being offered in a price band of 1026 rupees to 1080 rupees per equity share. Opens on 25th April 2023 and closes on 27th April 2023. For risk factors and more details, refer to the red herring prospectus.
Welcome back. We have about 15 minutes to go before the pre-opening rates kick in. Anuj is joining in now to tell us what to expect. Anuj, we have plenty of positive cues, right? I mean, this morning as well, good quality Nifty earnings, but none of that is taking the market out of its range. So that's getting a bit frustrating. You think the time has come?
Well, Sonia, Nigel, good morning. I think maybe, you're quite younger to me, so a bit more impatient. I think it's okay. The market had a big breakout on Monday. It had just one day of consolidation. It's fine. Look, the trajectory for the market is up. And we have been ignoring global cues. I think that's very interesting. Though global cues are now getting slightly tricky, especially from the US on that banking issue. So that's something which I'll keep one eye on. But most numbers, this earnings season for me has really been, the big highlight has been X of IT. And even in IT, except Infosys, everything has been looking quite strong, especially the domestic facing numbers. This morning, for example, Tata Consumer and Bajaj Auto, phenomenal numbers. You could argue that stocks may have already priced it in, but it's looking quite good. Now, today is the penultimate day of April series, so normally you see a big move. My sense is you need to see yesterday's high. If you start to cross that, then there could be fireworks. On the downside, the 200-day moving average is something we have been defending almost on a daily basis. Monday's session put a bit of a cushion above that. So 17,625 becomes your big support. As I said, on the Nifty, today's trade is about breaking yesterday's range. The high was 17,807, the low was 17,716. So we need to see how Reliance and TCS move in trade today, because both of them have been showing some good traction of late and negating the negative impact of Infosys. As I said, X of Infosys, most index heavies are close to breakouts. If you see the charts of HDFC Twins, Larsen & Toubro, ITC, ICICI Bank, have phenomenal, beautiful charts, most of them. The Bank Nifty is quite strong. That has been in a positional bull market. As you can see, some of the stocks till 42,250 is held, and another 2,000-point rally, which could take Bank Nifty to all-time high in May. That's been my stated position for last 2 weeks or so, and I'm still holding that because there's inherent strength in the banking stocks. So let's see, after one day of consolidation, maybe another day of consolidation won't hurt, but the overall trajectory of the market is still on the higher side rather than the lower side. As I said, I'll just put one caveat. Keep an eye on the US market. It should not capitulate. As long as it's fine, it's falling just 1-2%, we're okay.
All right, Anuj, thanks a lot for that. So as Anuj mentioned, the trend is up. And maybe yesterday as well, we took a bit of a break because of the weekly expiry as well. And that's why, financials and banking stocks did come a little bit lower. But let's move on then. We have Mitesh Thakkar and Sudarshan Sukhani as well who join us. Good morning, gentlemen. Thanks so much for joining in. Mitesh, you tell us, what's your view on the index, on the Nifty as well as the Nifty Bank? What are the levels you're tracking?
Morning. We have been advocating some kind of long positions, and yesterday I mentioned that around 17,820, which was the hourly high. The last time the markets hit those levels, some profit booking can happen, and advise people to take 1/3 position off the table. But I think the idea is that the directional bias, as Anuj was also highlighting, remains on the upside. So closer to 17,650, 640 is my support area. Buy on any dips, 33, 34 points is what SGX is indicating. Get another 20 points, I think, buy there comfortably, and I'm talking about spot levels. So around 17,700 would be a good entry point. Keep a 60-point stop loss, and I think we should re-attempt 17,820 and possibly this time get past it. So overall, this is a market which is trending on the upside. Use declines to buy into it, and as long as 17,550, which is the bigger support area, that doesn't break, I think I would be more of a buyer.
Okay, Sudarshan Sukhani is also with us. Sudarshan, the trend is on the upside and it's very visible. But I want to understand from you, what could be the leaders of this rally? Will it continue to be banks? Do you think IT could come back in a big way? And what about other smaller pockets? There's consumption, there's autos.
I would say that IT would come back. We have already seen the results in the US markets have been cheerful after hours. And banks have already done their bit. So if people are looking for a positional trade, IT is probably a much better idea. And it's also at its lows, so we are buying at a much lower level. Shall I also talk about the Nifty?
Absolutely.
Yes, please. All right. And see, you're right, the trend is up. Now, I also explained that apart from the uptrend, this is going to be a choppy uptrend. So we must be prepared for these repeated declines, but the declines are buying opportunities. And the levels are the same, which Mitesh has said, 17,550. So far as that holds, every dip is a buy, and there will be many dips.
Okay, fair enough. The uptrend is there, and it's been there. A bit of a pause sometimes, a bit of a pullback, but slow and steady. In terms of specific trades, gentlemen, good morning. Mitesh, what do you have?
Good morning, Prashant. I have 3 buys to a sell. Sorry, excuse me. Yeah. On the buying side, my first stock is Britannia. I think good price and volume breakout yesterday. So on a mild dip, let's say around 15-20 points, 43, 80, 85 could be a good entry point for the stock. Keep a stop below 43.40, 4,500 or thereabouts is the target area. A buy on Havells with a stop below 11.99 for targets of 12.50. And I would also want to suggest a buy on Reliance. It's been making that high of 23.81 for the last 2 days. So buy about 23.85, keep a stop at 23.70, and 24.20 should be the first target area. And one sell call, that's in Gujarat Gas. Keep a stop at 465, look for targets of 444.
And Sudarshan, what about you?
Well, Bajaj Finserv is a buying opportunity. The stock had rallied, consolidated, and now a breakout is imminent. And we use dips like today to go long in good quality stocks. Because of some snag in my software, I don't have the stop loss levels today. But Granules is an intraday short. That stock has been weakening. It's distributing apparently, and some lower levels are likely to come in. So is the case with ICICI Prudential. There was that big disappointment. The stock is probably going into a correction. That's also an intraday short. And a buying opportunity comes in Tata Power. The stock had consolidated for a long period of time. Again, I'm saying good quality stocks need to be bought when they are consolidating or when they're going through minor dips.
Okay, all right. Thanks a lot for that, gentlemen. We'll come back to you all for the 9-10 call as well later on in this show. But let's go back to Deven Choksi, who's waiting by. Deven, thanks so much for holding on. Tell us, what about the cement pack? There are various tailwinds because we're getting into an election year, so volumes will improve. Input costs, as we know, have cooled off. Petcoke, coal prices as well have cooled off. But pricing is an issue. What's your view on the stocks? We had Dalmia Bharat, who came out with a set of numbers. They are bulked up on the raw material, so that's why there was a margin miss. But your view on the space?
Overall, Nigel, I think we believe that cement as a commodity probably will have relatively better times, not only for 1 year, but for many years to come, as I see. Largely because of the fact that infrastructure spending in the country is continuing and probably growing at quite a rapid pace. Cement is going to be under demand. So demand side of situation is not questioned, either from the government side of spending or even from the spending, I think, by the industry and also by the real estate. So from that perspective, I think the cement demand continues to remain very, very strong. Fortunately, I think the raw material prices, the fuel prices have come down, and as a result of which, we are seeing relatively better stability and the margin front as well from most of the companies. However, it will continue to remain, I think, a little bit more challenging for some of the smaller players, as I see, compared to the larger players who are having bigger presence. The larger players have relatively better ability to meet the logistic-related challenges, the cost therein. And that's where probably I think some of the companies will be differentiators. As I see it, I think some of the names like Ultratech, even for that matter, ACC, Ambuja, and I think Shree Cement kind of companies would remain relatively, I think, stronger bet because of their ability to produce larger volumes. That is where probably I think one could possibly go with as far as I think the investment or the position is concerned in the cement segment. But we remain relatively confident about the prospects going forward for cement companies.
Okay. The other set of numbers, we of course didn't talk in great detail about it, but looked really good, Deven, was Mahindra CIE. And that stock has had a dream run. I mean, it's been one of the strongest stocks in its segment. A revenue growth of almost 20%. The EBITDA margins have improved 200 basis points in what has been a, challenging year. At this price, 360 rupees, is the risk reward favorable? I mean, it's already seen an 80% rise in the last 12 months.
Yeah, maybe I think one of the reasons for which this company has had their past, if one looks into, one would find that I think whenever the raw material prices have adversely affected them, I think they have slipped as far as I think the numbers are concerned. I think that situation is behind them.
Yeah.
And on the other side, the OEM customers particularly are having relatively better outlook for the business. As a result of which, many of the ancillaries are likely to show relatively better performance, including Mahindra CIE. I'm not too sure about, I think, the price argument at this point of time. Probably, as you rightly observed, I think the stock has already appreciated, and many of the good news may be in price at this point of time. if it sustains about 15%, probably I think going forward, one could look at this company once again from investment if the price gets corrected.
Devin, just a 30-second sort of response, if you will, on names like RITES, RVNL, IRFC, Texmaco Rail, anything between 10 and 20% gains yesterday. I mean, second day, very strong gains.
Prashant, I feel that I think since the market stabilized, I think some of these names have once again started coming back onto the surface. I don't think that the fundamental arguments have changed beyond the point. They continue to remain in a situation where the demand outlook is good and the profit margins would remain a little bit more challenging. So that is where I would probably remain a little bit more watchful about as far as buying into them into the portfolio. I find relatively better opportunities elsewhere.
Okay, relatively better opportunities elsewhere, and would not go into these names at this point in time. But I mean, momentum begets momentum. I mean, as we all know, and there is momentum in this particular space, and otherwise. At least yesterday's a dull kind of market. We'll take a quick break here. We are going to come back. The pre-open session will be with us. Mitul Shah of Reliance Securities will join in to put the focus on the auto sector. Bajaj Auto reported a strong fourth quarter performance. The street, though, is a little divided on the numbers. We also, of course, are awaiting Maruti's earnings later today. So both those stocks in focus with Mitul in just a bit.
Co-presented by Canara Bank. Together we can.
Yes. Quiet. It's okay for us to nod for everything. Because we are parrots. But your wealth manager? Shouldn't be doing that. You know? No. Oh.
Choose Nuvama. We only do what's right for you and your money. Nuvama. Let's do it right.
Hey, buddy. Hope you like them.
Introducing Apollo Alpha. Add more thrill to your beast.
We protect you anywhere, everywhere. Family Health Optima Insurance Plan. Star Health Insurance. Always at your doorstep.
This is TV18 and you're watching CNBC-TV18.
Co-presented by Bank of Maharashtra. Ek Parivar, Ek Bank. Co-powered by IBM.
Okay, welcome back. A minute to go for the pre-open rates to start to come in, and we'll have them with us in just a bit. Rajesh Palvia is Vice President, Technical and Derivative Research at Axis Securities. He's joining us right now to take some questions. So, Rajesh, good to have you with us here. Thank you for your time. How are things looking, Rajesh? Will it be a up day, and what kind of trades should one take now?
Good morning, Prashant. So as we are moving to the expiry for this month, so looking at the overall setup, we believe that, this bullishness is going to continue further as both the indices have witnessed again, short covering in the previous trading session. And most of the derivative space also witnessed the short covering action. Almost Nifty is trading near to this 17,800. That is the crucial level as of now for the Nifty, as throughout the month we have seen most of the call writers were active at 17,800 strike for writing the call options. But looking at the data for the previous day, we have seen some call writers have covered their position for 17,700, 17,750 strike. So we believe that this short covering is going to continue, and once we crosses above 17,800 level, then possibly this rally can extend further towards 18,000 mark also. To play this strategy, to play this move, we are initiating here to go long in the 17,700 call option for 4th May weekly series. It was closed at around 163 rupees. So we are initiating here to buy that 17,700 call option. And we are projecting target of 240 to 250. And one can keep a stop loss of 135 to go long in this call option. Looking at the overall setup, we believe that, Aurobindo Pharma is looking attractive. And the kind of breakout we have witnessed on the monthly as well as on the weekly chart, It's a third consecutive month where Aurobindo Pharma is exhibiting, this bullishness. So we are bullish on Aurobindo Pharma and we are projecting target of 630 to 640. One can buy this stock with stop loss of 590. The second stock which we like from capital goods space, that is ABB. Stock has shown a short covering action in the previous trading session, and looking at the overall setup, stock is in bullish territory for long-term setup. We believe that ABB can scale up further higher from the current level, and possible target we can see in the short term towards 34.30, 34.50. One can buy this stock with a stop loss of 32.90. The third stock which we like from the banking space, the PSU Bank, Canara Bank is looking very attractive. And looking at the overall setup, as stock is holding above 300 level and stock is trading now above 50 to 100 day moving average, we believe that Canara Bank can move further higher from the current level. 325 to 330 could be the possible target. One can buy this stock with stop loss of 300.
All right, thanks a lot for that and have a good day. So that's on Canara Bank. But the pre-opening rates are settling in right now. And the two stocks that will be in focus this morning are Bajaj Auto and Tata Consumer. They came out with numbers post-market hours yesterday. Bajaj Auto looked like a pretty good set of numbers. It was better than what the street was estimating for sure. But there are both bull and bear case scenarios in the market. So let's take a look at first the bull case. Morgan Stanley's, Jefferies and Motilal Oswal, three brokerages that are positive on the stock and have raised either earnings estimates or target prices. Morgan Stanley has raised the target price from 4,486 to 5,063. Jefferies has raised it to 5,100 from 4,800 earlier, and Motilal Oswal has a target price of 4,400. Now, the bull case is that the numbers, despite all the challenges, are looking pretty good. The EBITDA margin is at a 9-quarter high, and there are three catalysts for future growth. There's the Chetak EV ramp up. They're increasing production of the Chetak. So now from 3,000 retail sales a couple of months ago, it's gone to 5,500. And once the production increases to 10,000 units per month, then of course sales will also pick up. So that is one trigger. Second is a Triumph product launch that happens on the 27th of June, and that could help them scale up in their premium motorcycle segment. And the third is recovery in exports in FY24, which the management in their own admission said will happen from July onwards. So, these are the three triggers that the bulls are hoping for. On the bear side, you have Citi and CLSA, but just wanted to point out that both Citi and CLSA, despite having a bear case, have raised their target price. So Citi has raised it to 4,000. CLSA has downgraded the stock to a buy, but has raised their target price to 4,659. The bear case, once again, is on the export front. They talk about how the unavailability of the dollar remains a key concern for export markets, and timeline for a perceptible volume recovery remains uncertain. So these are a couple of things to watch out for. Mitul Shah, who tracks this stock closely, joins in now. Mitul, good morning. Are you on the bull or the bear case, bear bandwagon? And what's your outlook on the stock now?
Yeah, good morning, Sonia. Thanks for having me on CNBC. We yesterday downgraded it to hold recommendation, considering all those positives seems to be priced in, because stock has reasonably moved up. In fact, it has given 25% kind of a return in last 6 months, whereas Nifty was nearly flat. So positive seems to be priced in, upside would be limited, and there is possibility of further negative surprises on the export front, as street is expecting recovery or a strong bounce back July onwards, which management highlighted earlier. We believe that entire FY24 would remain under pressure, and export growth would be just single digit, probably just 5-6% growth, and which will be 20% below the peak level recorded company for export in FY22.
Okay, got that. So, the one thing though, which I think the management has also alluded to, has been that exports continue to remain vulnerable, right? And that's largely because of external conditions, shortage of dollars and things like that. That engine will take some time to start firing. What is your own expectations there?
Yeah, here I would like to give something insightful, that in case of export, for example, Nigeria, their bike used to cost roughly 2,40,000-2,50,000 kind of a naira per vehicle pre-COVID level. Now, after this currency devaluation, prices going up because of the cost inflation passed on everything. It is now more than double, nearly 500k naira is the price of the vehicle there. So affordability is a major question mark, and apart from those currency related issues, purchasing power has gone down, which we believe will take sizable time to get back to those pre-COVID level, and that is where the company will continue to find the challenge. And that's why, as against state expectation of double-digit growth for FY24 in export because of a very low base of last year, we believe that it would remain a single-digit growth only. And that's where valuations not very comfortable for major upside from this level.
Okay. What about the triggers, in terms of, there are two big triggers for the company, right? One is, of course, the Chetak EV ramp up. I know EVs is still a very small part of the overall business, but in any case, that's the future, it seems. So that's one. The other one is the Triumph launch that happens at the end of June. Do you think these two triggers are enough for the stock to perhaps re-rate on the upside, or do you think it's still a very small part of the overall pie?
Yeah, that's right. Both seems to be a trigger in terms of a positive sentiment as well as some improvement on the business side. But in terms of number, not even FY24, probably even next 2-3 years, this number would not make any major impact on the financials of the company, or financial contribution to bottom line would be still much smaller to give any valuation comfort in terms of further re-rating. Even for Chetak also 10,000 units per month probably may not lead to a break even or near to break even kind of a number. So FY25 may see something positive on the bottom line from Chetak side. Similarly, on Triumph also, we believe that initial phase of investment would continue for next 1.5 years before it makes some noticeable profit.
Okay, a quick word on Maruti because it comes out with numbers today and it is one of the biggest Nifty gainers in the pre-opening session. You're a bull, are you a bear? What are your thoughts?
See, we remain positive on Maruti considering a strong pending order book in the PV segment itself, and particularly in case of Maruti, Maruti is now launching all those new products in the SUV segment, which has been gaining the momentum, will continue like that. So there is a market share gain possibility very high for company in coming months. And the way Bajaj has reported quarterly performance, there is a similar kind of a positive outcome for the all other OEMs in terms of a benefit on the raw material side. So margin for all the OEMs, including Maruti. So we remain positive on Maruti Suzuki.
All right. Thanks a lot for joining in. In fact, on Bajaj Auto that you were mentioning, we will, of course, pose all of these questions to the management. The management of Bajaj Auto joins in at 9:30 a.m. today on Bazaar. So do stay tuned in for that. We're just getting into the market opening in, I think, less than 5 minutes from now. So let's get our technical guests back on board. Sudarshan, what's the big call at 9:10? It looks like it's going to be a slightly slow start today.
Well, yes, but I would expect the Nifty to take a dip also. This may not be the correct picture. Tata Power is a buying opportunity, but it's a positional trade, not intraday.
Okay. All right. Sudarshan got that. What about Mitesh? What's your 9:10 call?
I'll go with the buy on Havells with the stop below 1200 for a target of 1250.
Okay, thanks a lot for that. So plenty of stocks that could be in focus, right? Wanted to just point out a couple of them in the broader markets. Mahindra CIE had reported very good set of numbers. So that one is up almost 7%, could be one of the stock of the day. But Nigel, Dalmia Bharat?
Well, yes, Dalmia Bharat is opening up a little bit red because the margins were disappointing. The top line was a little bit better since volumes were better. EBITDA, though, that was a miss of closer around 10% in comparison to our poll. That's what resulted in the margins compressing a little bit. And the profit number first looked very, very good. But there's an exceptional one-time income because they've sold some of their non-core assets. The reason that the margins were a miss is because the raw material cost was much higher for this quarter. Together, it was around 750 crores compared with around 450 crores odd. Now, the stock may not see a very, very big correction. I think it's down only around 0.5% in pre-open because, the pre-positioning was such that the stock was as is down close to 4-5% in the last few days. Second up, this raw material built up could hold them in good stead in the coming quarter since they've already have the raw material with them. Valuation-wise, it has some support in there. Trades at a discount in comparison to its larger peers. And then now it's moving towards 50 million tons also. There is visibility on capacity expansion. So The stock is a little bit lower, but not that much because part of the street expected these numbers. Mangalam joins us though to tell us about Tata Consumer. Mangalam, good set of numbers.
Good set of numbers for Tata Consumer. It's a beat across all parameters. If you just take a look at the revenue, the company posted a revenue of 3,619 crores. Most on the street were working with a number just above that 3,500 crores mark. The EBITDA, the street was expecting a compression, but this time around the company has managed to report, stable EBITDA margins, and that's largely led by the improvement in their international margins quarter on quarter. The net profit at 345 crores, much above street expectations of 265 crores as well. But apart from all the other internals, what really stood out this time around is the building blocks that the company is making for the future. Their total reach has now reached about 3.8 million outlets, much ahead of their September target of 4 million outlets, and they will most likely beat that as well. Modern trade, which is your large big box modern retail stores, account for nearly 14% of their sales. E-commerce is around 9%. The new launches that the company has done in FY23 is twice the number of launches that they did in FY22. So that's another building block that's done well. And their growth businesses that we keep talking about, Sampann, Soulful, as well as Nourishco, are at 15% of sales versus 10% year on year. This was in single digits a couple of years ago. And add to all of this, they have a cash of nearly 3,000 odd crores. So this works well for the company as well. The stock had rallied already on Monday. Let's see how it pans out today.
All right. Mangalam, thanks very much. Now, AU Small Finance Bank, let's refocus. Abhishek is here. Abhishek.
Well, the net interest margin has compressed this time around, and it is here to stay in terms of the compression. Net interest margin came in at 6.1% when compared to 6.3% in the same quarter last year and about 6.2% in the previous quarter. So operating profit growth was a mere 2.7% sequentially. In the previous quarter, they had grown more than 11% on a quarter-on-quarter basis. So you are seeing a compression in operating profits due to decline in net interest margin. Cost to income ratio is elevated at 63.1%. That is because of the other expenses which increased in double digits on a sequential basis. The tax rate was on the lower side, which has held the PAT this time around. Asset quality has improved, gross NPA down to 1.66% when compared to 1.81% in the previous quarter. Even the restructured book has actually improved on a sequential basis. So in terms of PNL, they have beaten our poll. However, Nomura has downgraded the stock to neutral from buy. They have cut the target price to 630 from 725 that they had earlier. They say that the ROA moderation will continue going ahead. There are headwinds to near-term multiple, that is the valuation of price to book value, and that is why they see multiple challenges to AU sustaining these return metrics over the near to medium term. Back to you.
All right, thanks a lot, Abhishek, for that. We just have 30 seconds left for the markets to open today, and looks like it's going to be a very, very flat opening, so don't get your hopes too high. But there are, of course, constituents that are looking good. So the top Nifty gainer is Bharti Airtel, Maruti Suzuki. Tata Consumer, Bajaj Auto also could be in focus post numbers. Good numbers from Mahindra CIE. So we do have some positive triggers that the market will latch on to. The negative perhaps is the fact that global cues have been a bit subdued. The Dow was in fact down 350 points yesterday. So we are going into trade with a bit of a global setback. But post-market hours, you had good numbers from big tech companies in the US. So, that's another positive. So let's see all the positives and negatives put together, cancelling each other. Markets absolutely flat. That's the first tick. The Nifty down about 15 odd points. The Bank Nifty down about 90 points. The Bank Nifty is dragging a bit, while the mid-cap index is down about 50 points. So the start is in the red, a tad bit really, nothing major to complain for the bulls. Bajaj Auto is actually down 1%. So remember, the stock has also rallied quite a bit, and there are some concerns with respect to exports, etc. So maybe some profit taking is what you're seeing. Hindalco, Divi's Labs, Ultratech Cement, Tata Steel, a couple of other stocks that are dragging their feet. In fact, metals is on the back foot this morning, and the PSU. So BPCL, ONGC are all in the red at the moment. Reliance, oil and gas in general is under a bit of pressure as we speak. So watch out for that. On the upside though, Eicher Motors is your big mover, up about 1%. You have Bharti Airtel, TCS, Bajaj Finance and Adani Enterprises that are moving up. Infosys is clawing back a tad bit. Maruti Suzuki ahead of its numbers is up in the green. Tech Mahindra and Titan are a couple of other stocks that are just trending higher a tad bit. And otherwise, the market is very, very quiet. I think, Nigel will have a lot more exciting stock movements to talk about. But the headline index is really not doing too much. Some of these stocks like Glenmark Pharma are trending at 52-week highs. RVNL, Ircon also at 52-week highs. But the stock of the moment in the broader markets is Mahindra CIE. Almost a 10% rally now on that stock, post a very good set of numbers.
Well, that's right, Sonia. Just to give you a couple of stocks more, these Gujarat-based companies, they are doing very, very well because of that policy that's announced. The Gujarat government, they have said that the Gujarat state PSUs, well, they could have to announce, bigger dividends, and various other corporate actions as well. So GMDC is up and about in today's trading session. You have GSPL as well, that's up. You have GNFC as well, that's up. So all that clutch of stocks, well, it's firing away as we speak. A couple of other notable movers today. To pull up Dalmia Bharat, the stock started off with a cut-off closure around 0.5% odd, but a couple of these other cement names as well are taking a bit of a knock, anticipating maybe weaker than expected numbers. But I think for Dalmia Bharat, it's more a company-specific issue. You have Ultratech that's a little bit lower. Shree Cement is down close to around 1.5% or thereabouts. Indian Hotels as well is up close to around 1% in today's trading session. AU Small Finance Bank is now down close to around 2.5%. So clearly the street doesn't like that set of numbers. And MCX is down 4.5% as we speak. IGL as well added to the losers list, down 1.5%. The initial dip has got bought into the Nifty along the flat line after starting off a little bit lower.
Nigel, the stock of the day once again for the third day is RVNL, right? I mean, it's up 7%, which means in 3 days, and this is the first hour of the third day, in 3 days the stock is up 45%. So that is tremendous, right? I mean, for a name like that to do what it is doing, and it's coming up on huge volumes. And I won't be surprised if there are, I'm not sure if there are blocks or anything on RVNL, but volumes are really through the roof on RVNL. GNFC and GSFC, etc. Nigel mentioned those. Adani Green is up about 2.25%. That's coming up with large volumes. IRFC is absolutely flat. The other one is IRCON. IRCON, by the way, is up 2.5% right now. For the week, IRCON is up 13%, 14% actually. Another follow-up from yesterday is Bombay Stock Exchange. I mean, a lot of this seems just pure momentum. I mean, BSE was up 8% yesterday. Out of the blue, it's up another 2.5%, 3% right now. GMDC, we mentioned 7.5% higher there. RITES, for example, is another one. It's starting about 1.25% lower. For the week, 3 days, it's up 11% already. GSPL is the other one, which is up about 6%. So this is largely the list of what's moving right out of the gates. And it's looking good. And lots of volumes. It's not a low volume start at all. Now, on the downside, Bajaj, Sonia mentioned, is down. It's still down 1%. AU Bank is down a full 3% now, 642 on AU Bank. Abhishek was highlighting that for us. IPCA fell 10% yesterday. It's got another 2.5%, 3% loss right now. IPCA, that is, 720. The street not putting too much in terms of that acquisition of Unichem. Zomato is down 1%. Zomato is pulling back a little bit. It had a good 5-6% move yesterday. Persistent is down 1.25%. Numbers were not bad. 44.21 on Persistent, but stock's not done very much. And MCX is down about 4.5% there. The chief technology officer has quit. And the worry, of course, there have been this issue of the technology platform, whether they're going to implement their own technology platform, by when, whether this will lead to further delays, etc., etc. So that, I mean, again, straight off the bat, it opened 3% lower, is down almost a full 5% now. So that was a little bit of a dark horse in that sense, which is seeing a cut. I mean, I'm seeing lots of other 1.5%, 2% losses on volumes, which we can get to in just a bit. Z, Hindalco, IGL, Nykaa, Shree Cements, etc. are lower as well. The Nifty is flat. It's down about 20 points right now. Sonia.
I just want to make one mention on Mahindra CIE. I was going through the presentation and the numbers are looking very good. No two ways about that. But it's also a record high quarter in terms of margins for Mahindra CIE. Coming in at almost 15.6%. On an average, they've done 12 to 13% over the last many quarters, and now their margins have picked up quite a bit. But what the street might also like is the fact that the company, their tone is quite bullish in the presentation. They say that the India business is doing well. There are good expectations from that, and there is now stability in the Europe region. If you remember, Europe was a big problem pocket for many of these, auto ancillary players, but now they're talking about stability there. I think the street would like that.
All right, so that's Mahindra CIE Auto with a decent move right now. Our market master of the day is Mihir Vora, Director and Chief Investment Officer at Max Life Insurance. Mihir, good to have you with us here back in the program. Thank you very much for your time. It's earnings season, so I think we should start there. in terms of what your assessment of earnings so far have been. Broadly, not too bad, right? I mean, actually, banks have reported pretty solid numbers. The rank and file are yet to report large segments outside of top tier IT and large banks, etc. So we're still awaiting those numbers. But first impressions right now.
Hi, good morning. Yes, overall, at least the large caps which have reported so far in technology, in oil and gas, even in some of the financials, all of them have reported decent numbers. So I don't see too much of an issue. And hopefully, with commodities prices coming off in the following quarters, we should see some of the discretionary and FMCG names also kind of show improvement in margins. So I guess the worry will not be so much on the margins going forward. We'll have to now see how the top line goes for most of these.
Okay. Mihir, hi. Welcome to the show. Thanks for joining in. Wanted to talk about a couple of spaces, right, that are hot topics right now. One of them, of course, is autos, where demand has come back in a big way, but some pockets like exports are still under quite a bit of pressure. So in that context, what do you do with names like, say, a Bajaj Auto, which have already given you 20% returns this year? Do you see more upsides here?
Autos, I would say it's still a mixed bag. While we see some amount of pent-up and low base effect in the two-wheeler segment, the passenger vehicles, which is the car segment, still is a question mark. We'll need to see this month's number. And initial indications are that there is some slowdown in the overall discretionary spend, whether it's in auto or even some segments. So I'm a little bit cautious about consumptions compared to, say, a couple of months ago.
All right. Hi, Mir. Good morning. Thanks so much for joining in. Mir, from the banking pack, we're still some distance away from the fresh all-time highs, but that's where the street is very, very bullish on. How would you approach this space? Would you go for the large private sector banks, or would you still find some valuation comfort on the PSUs?
I think it can be mostly the private sector banks, and even some of the NBFCs are now beginning to look interesting at these valuations. So I think we should look not only at banks in the private sector, but also the private sector NBFCs. And public sector, I would still stick to the top few, not really go down the curve. But I think as far as the results is concerned, it's been a great season so far. Most of the results in the banking space have been quite encouraging. And I don't expect any major negatives as far as the asset quality is concerned, even for the coming quarters. So I don't think asset quality is going to be an issue. We just need to monitor the margins because interest rates have gone up, RBI has taken rates up, and we are seeing a fight for deposits between all institutions, whether it's public or private sector banks. And of course, we also should see any signs of moderation in credit demand. So I think asset quality is not going to be the monitorable for the next few quarters. It's mostly going to be margins and top line.
Okay, margins and top line. Mihir, pharma is another space which has seen lots of deal activity. I mean, actually, this year so far, that's the only space which has seen lots of deals, in the private space and in the public space as well. Any thoughts here? We had Naren some time back who joined us, who of course looks at, sort of sectoral weights within the broader market, and when they get to extremes, he makes a call whether they're attractive, etc. He deems them attractive. And recently we've been hearing some positive voices that perhaps generic companies, etc., will start to see some relief. Stocks like Aurobindo in the last 1 month have done well. Do you like any of those? Have you bought any of those recently?
So in pharma, our preference is more towards the domestic market, because that's where you have some pricing power and branding benefits, distribution benefits. As far as the US market is concerned, the call every year is whether the worst of the generic price erosion is over. And while we have seen some moderation in the rate of decline, which is decline in the rate of decline, but it's too early to say whether the worst is over. So I would still stick to the more domestic-oriented players.
All right, you would stick to the domestic-oriented players. I wanted your thoughts particularly on IT. Do you think the worst is over for the IT space? I ask because, some of these companies have indicated that the client spends have not moved as much as perhaps what the fear is in the market. And numbers have also been good in the mid-cap IT space. You think the worst is over?
No, probably not, because we are still not probably the past. We are still probably not past the the sharpest US recession quarter. So you might see some more deceleration in US corporate spending, retail spending, etc. So maybe things get a little bit worse before they get better. So I would be more cautious on US tech spending and by corollary the Indian IT services space.
Anything you're getting excited about, Mihir, lately? Any space?
We're sticking to the same themes, which is domestic overall doing better than the global. Especially government capital expenditure should continue very well in the election year. So all the construction companies, defense, make in India specific like chemicals, etc. So overall, I think domestic doing better than the global, and government support to some of the sectors like defense, railways, etc.
You know, but does railway gel with that broader theme that you're talking about? I mean, stocks are flying. The problem with some of these sectors is that if you've tracked these things long enough, last 15, 20 years, it almost is a blind spot, right? Because for so long, these stocks don't do anything. You know, they rally once a year and then they go back to being, and then something changes. And it's kind of hard to get your, get your head around that, well, it is changing and it is for good now. I'm assuming it's a problem many investors face, but the rallies are very, very large now on these names. What's your sense?
Yes, so because, after a long time, the government has made it very clear that we are going to spend a lot in these two areas, apart from infrastructure and road building, which has been the focus area in any case. But defense and railway spending has actually gone up. Indigenization is going up. And there are clear guidelines and steps being taken to procure more and more locally. So it can be a longer-term theme after a long time.
What about real estate? Everyone's talking about it. After a 7-8 year down cycle, finally real estate is coming out of the woodworks. But that's on the residential real estate market. What about the stocks? Do you see more valuation and growth upside?
I think so, because if we are talking about India, which has to grow at more than 6.5%, if you have to go to 7.5%, it cannot happen without real estate and construction and infrastructure. So for the next 5 years, if we do believe that we'll achieve anywhere close to 6.5-7% growth, then real estate demand will go up, both on the residential side as well as the commercial side. So it can be a long-term theme, and stocks are not that expensive in terms of valuations.
All right, Mir, what about these new age themes? One stock that's making fresh 52-week lows is, Nykaa. I think we should pull up the chart out there, and that was one of the few profitable ones that we were talking about just a year or so ago. What's your view on these themes, and are any of them coming to the value zone, or are they still very far away from it?
I think, new age is a very broad area. We are looking at it on a case-to-case basis. We do have exposure to a couple of names, but not in the retailing space. It's more on the insurance space, etc. So we are taking it one stock at a time, looking at the franchise values, the customer base, etc. for each particular company, and then taking a call. Not really painting the whole new listings in the last couple of years with the same brush.
All right. Thanks a lot, Mihir, for joining in. Have a great day. We will speak to you again very soon. The market is quiet. It's not doing too much. But yes, the bias is on the downside. So the mid-cap index is down 120 points. The bank Nifty is down almost 200 points. So it doesn't look like it's a good start for the bulls. But Bajaj Auto posted a decent set of numbers. They were well above the street estimates. Margins expanded 220 basis points, came in at a 9-quarter high of 19%. The company also said that it's a sustained momentum on the domestic front that more than made up for the setback in exports. Rakesh Sharma, Executive Director at Bajaj Auto, joins in now to talk about that. Rakesh, thanks a lot for joining in. First, on the margins, it's come in at a 9-quarter high, but just wanted to understand that do you have any more margin levers for FY24? If yes, what are they? And what could the margin band be in FY24?
Good morning, Sonia.
Morning.
The sustained and improvement in margins is really on account of three things. One is, of course, we've benefited from the gentle devaluation of the Indian rupee, though the export component has come down, but that's helpful. Then all the cost increases which we have faced, which are not too much, but there are some incidences of cost even on account of the changeover to things like OBD2, though it was very recent. But the approach has been to judicially pass these on. And the third factor has been actually the most significant one, which is the richer mix. We are now, 60% of our domestic business is in the 125cc plus segment, which has a higher ASP and a higher margin. The three-wheeler business has done extremely well with a commanding market share of 78%. And CNG auto is one of our most profitable products. Premium bikes of KTM and all have also done well. So when you put all that together, these have contributed to improving the mix. So you can see that all the three factors, even if I keep aside the devaluation piece, but the approach of judiciously passing on cost increases. In fact, I think we're the only ones who have passed on the cost increase of OBD2 in April. That and in continuing improvement in the mix should hold should do well for our margin. But as you understand, the Bazaar Auto margin is a very complex thing, a lot of moving parts there. For instance, if suddenly see a surge in Africa exports, Africa is generally less than the average. But if we see a surge in the three-wheeler side in exports, then that is at a very handsome margin. So where the where the penny will exactly fall is difficult to say. But this is the point we'll be striving to maintain.
So the reason I asked Mr. Sharma is, in the pre-pandemic days, right, in the heydays, so to speak, the hallmark of Bajaj Auto's numbers used to be 20% margins. And holding on to that level. Of course, things changed a lot. There was, a big downfall as well in the sector. But now that things are improving, exports are also getting sort of back on track. Is there a possibility of holding on to 20% margins in FY24? Could it even get better than that, you think? That was my, question. Whether there are more levers over and above what you spoke about.
Yeah, it's the North Star we have achieved. It's a watermark which we have achieved. And directionally, the approach of the company is to be very, very conscious of the bottom line. But, this is an optimization thing. And you have to optimize growth, market share, competitive position, and, of course, the margins. So we will continue to maintain that. And we are not numerically driven that we will sacrifice the other factors in the business to just hit that 20% line. But yes, as you can see, even in a very, very difficult year, the margins have improved. So that is a result of the fundamental approach of the company towards a better profitability.
All right. Hi, Mr. Sharma. Good morning. Good to hear some bit of optimism, actually. And even the read-through for the numbers are pretty good. I want to focus on the export volumes because that did get hit badly in the Q4. The monthly volumes came down to around 115,000. I'm reading a Jefferies note and they're saying that they expected to go to around 150,000 on a monthly basis. Though for the year, they're working with more or less flattish export volumes. But would you go with these numbers? Flattish volumes for FY24 in comparison to FY23? But the run rate improves to around 150,000 from around 115 that we saw in the past quarter.
Yeah, most likely they've put together this scenario after the analyst call last night. But, it's difficult to sort of pin it down to precise numbers from the company side. One thing I can tell you that in Q4, while the shipment numbers still are at a low profile, we had seen that the retail demand is improving in almost every geography. So Q4 was slightly better retail terms than Q3. However, there was one country which stood out, which is Nigeria, which is 25% of our exports, which had a difficult election and demonetization. So it was almost zero in February. So to give you an idea, we sold only 4,000 units in Nigeria in February and 28,000 in March. And I think we should breach the 28,000 number in April, not by too much, but a little. There's still a few days left and the numbers will come in. So you can see that at a retail demand level, the wheel is now just started to turn the other way. We would want to watch it for at least a quarter more. However, the second challenge in exports has been organizing the US dollars for trading. That availability is very poor. Central banks are very cautious, difficult to get letters of credit, confirmations, etc. Now, when that opens, we cannot say, but just sensing it in the basis of how much time it is taking for letters of credit to be confirmed, to get established, we think probably another 3-4 months, some kind of equilibrium will be reached, which means with the channel stocks low, the wheel turning the other way in retail demand, though gently, and if the dollar availability improves, we can look forward to better exports. But how much better, how exactly it will pan out, as you can understand, it is something which we will have to wait and watch and experience.
Mr. Sharma, good morning. We also had Mr. Bajaj with us a few days ago, and he was very confident and positive about what he expects the Chetak portfolio to be able to do, and the vision to build that out in a very significant way. I think you've said that you will, the guidance is to do about 10,000 units a month from June onwards. Could you tell us if you're on track to do that, and can you provide some more numbers in terms of what can this portfolio really do for the company as a whole? What can this grow to, really?
Well, yeah, we have been very confident about Chetak as a product, its place, and we have taken a very calibrated approach to building the market. One eye has always been on a scenario where subsidy is reduced or even eliminated, and then how we would respond to our back-end vendors and front-end dealers, etc. So therefore, it has been a calibrated move. And when we were able to restructure our vendor system, negotiate better costs, and put a different kind of a cost structure to our product, we have changed the prices in March, and we've had a profound impact. It may not be visible to you because our retails only jumped to about 5,600 in March. However, we got handsome bookings, which acknowledges the fact that basically Chetak was a very highly preferred product, only its price was very high. And the supply chain side, the manufacturing side is resolving itself to start supplying about 10,000 units from June. Hopefully that is the time when demand and supply will finally meet. And after that, we are also expanding the footprint, which is currently 88 cities. By end of H1, we should be in about 120 cities with 140 almost exclusive stores for Chetak, which are, very nice stores with exclusive service centers, which contribute a lot to the brand building. So all those things hopefully will drive the Chetak beyond the 10,000. And later in the year, we will expand the portfolio. At this point of time, how exactly we will expand and what numbers we are going to gain from that, we will sort of talk about that later. But yes, scale-up phase of Chetak is now truly on.
Okay, all right. I had one follow-up question to what Nigel was asking you about on exports, right? As the export recovery kicks in, what could you do on an average in terms of monthly volumes? Now, let's try and put the numbers. In Q4, monthly exports were around 115,000. Back in the day in FY22, your peak was around 200,000 plus that you would do monthly. At any point in time, can we get to somewhere in a mid-range, maybe 150, 160,000 in FY24? Are you looking at it July onwards itself? If you can give us some ballpark numbers on monthly exports.
See, Sonia, like I explained, that 200,000 is there. The markets will return to it. The whole question is the timing of it. And the timing of it is really dependent a lot now on how the international trade environment eases up. And that is anybody's guess. So therefore, it would not be right on our part to put out a number because we won't have a logical basis. It's a field of improvement, but we don't have a logical basis to put out a number and give a guidance on that. Perhaps after quarter one, if we see an improvement, let's say by June, July, we will look at some scenarios for exports.
Okay, got it. So there's still a bit of uncertainty on the export side, so you don't want to give a guidance. On market share, you ended FY23 with around 17.5% market share. I think it was the motorcycle market share fell about 100 basis points year on year in FY23. For FY24, what is the guidance? What's the company looking to deliver?
Well, our focus to a large extent has been on the upper half of the demand pyramid, which is, the 125cc plus, which has actually grown by 2.5% points or so in market share on retail term basis. And we will continue our thrust over there. It is in line with the market trends because that segment is completely outstripping growth-wise the performance of the 100cc segment. And we've got a lineup which is in line with the trends. It is already there in the market. It is doing well. And we continue to increase market share over there. So we ended the quarter with about 28% on retail basis. I think we will continue to add over there. However, having said that, in the bottom half, at the entry level, there is a loss of market share. It's a little bit of a red ocean play over there, and we are conscious of the profitability standard. So we've not really participated in it through using the pricing lever. But we have made a major play in December and January, where we have launched the Platina 110cc ABS. It's the first 110 bike in the world with ABS braking system. And it's a very meaningful differentiation because safety is a huge concern. And that has started to chip away at market share. It's a difficult thing to, convey differentiation at that segment. There is a major campaign. There are over 3 lakh test rides given. So there's a huge effort mounted by the company. And if that starts to improve, then the loss of market share at the very entry level will get mitigated by it. And at an overall level also, this surface level stagnation, which you see 1%, which should start to improve on the basis of significant gains in the 125cc plus segment and, mitigating the erosion in the entry level through the 110cc segment.
All right, got it. Mr. Sharma, thanks a lot for joining in and all the best with the quarters to come. I know this is a tough time for most businesses, especially the ones that have a global exposure. But as you said, seems like the worst could be over. Thanks a lot for speaking to CNBC-TV18. Well, let's slip into a quick break. On the other side, we'll bring you Q4 expectations from the metal sector in our special segment, Quarter Se Quarter Tak. We also have Ashish Kejriwal of Nuvama Institutional Equities, who will be there to share his views on the sector. Later, Rajesh Gupta, the director of Lloyd's Metals and Energy, will be with us for an exclusive chat on their Q4 results. Stay tuned.